Hey guys, thank you so much for being here. I appreciate it. My name is Max. The channel's name is The Covered Caller. I'm getting excited about football season, and I have my team's jersey on. I can't wait. I can't wait. All right, so we've got all kinds of stuff going on. I've hopefully got some of the stuff improved from this morning. Sorry about this morning's show. Didn't have very much stuff to look at, but all right. So first of all, let's start. Let's first of all start with with the Qs. Well, when we last checked, the Qs were pulling back into a hopefully bullish order imbalance left behind by this gap between last Monday and last Tuesday. And let's see what happened. I mean, the bulls, bought and got it out of the gap. But then right at the end of the day, it fell back into the gap. So this one's, it's still green or whatever. At least it didn't close on the other side of it and validate it and invalidate it. Other things been equal, we wanted to see is it to go up and to go through the little gap left behind this morning. So that gap is still in place also. So right now we're getting stuck in a pretty small trading range. But we do have, interesting note, if we do start to rally, we do have three supply imbalances, potential supply imbalances above where sellers might come in. But of course we have this place right now that we're in right now, and hopefully it looks like it's bullish. And then we have other imbalances down here, other places. But anyway, so tomorrow ought to be interesting. So let's look at Bitcoin. All right, let's not do market cap. Let's do a little Coinbase price action there. Good job, Bitcoin. Bitcoin broke out to a new high on this 30-minute chart. Couldn't really hold it. Came back and fell back in, but it's just building out a higher flag, in my opinion. We went up and then built out a flag or a wedge. I guess we built out a wedge here. So, wedge, flag, whatever. Broke outside of the wedge on the bullish side, it went back up. So anyway, Bitcoin looks a lot better than the NASDAQ does. Bitcoin's up 1.7, and I believe the NASDAQ finished down almost a point. On the 24-hour chart, it finished down 0.96. All right, so let's see what we got going on here. Yeah, and on the cash market, the ETF market, it finished down 1 point. All right. So let's check out old Mr. SPY and see what's happening with him. Okay, well, this one's stuck between two imbalance areas also. So far, the bulls have supported this, the gap left behind between Monday and Tuesday of last week. But we have stuff on top of us also. So, it looks like we're kind of entering a range-bound market potentially. At least for a while, we'll see. We'll see. One tweet could break us back out, could invalidate this bearish supply imbalance, potential bearish supply imbalance. All right, so let's check out gold and silver. Heck yeah, gold up about 3/4 of a point. I'm not drawing the gaps on gold because there's too many of them. But there's 1, 2, 3, 4, 5 potentially bullish gaps. We even left behind one this morning, got into it, and so far the bulls have supported that one. I guess the question on this is, what's going to happen when we get back up here into some of these potential bearish imbalances. Anyway, it's going to be fun to find out. That's gold. This is silver. It's basically the same. It's basically the same situation. Let's just delete that one. That one's no good anymore. We have several bullish imbalances, potential bullish imbalances below us. Okay, well, hopefully silver will be up here and test this area at 65, or not silver, but SLV. Jackson, what are you doing? Come here. Get in here. All right, my apologies. All right, so let's see, gold, silver. Let's let's go now and let's try out some of this other stuff. I guess we could look at this. I don't really feel like looking at this. Let's see if there's any tweets going on. So that's about Canada. I mean, which could affect the market. It's about the, the tariffs. But anyway, it doesn't seem like it's really news. Okay, this is just political stuff, which is fine. Which is fine. Okay, so nothing to see there, at least not yet. I wonder if I'm in last place yet. I'm in 8th place on my fantasy league on income and 10th place on growth. The only one I'm ahead of is right here visiting with us today, or not visiting with us, but here in the audience. Thank you, Dividend Degenerate. It will just be a matter of time. He's going to pass me like he's standing still, probably. We'll see. I mean, let's go look. If some of my stocks don't get with it, let's just go look real quick, and then we'll get into the rest of the stuff. Let me just look really quick. Here's the daily change on my picks and on his picks. All right, so my blocks was down 0.1%, but his Snowy was pulling back. Chippy was down for him, but GPTY was down for me, also the same amount. K yield was down, but his GOW did well there. I got him here. The AVGW hurt him a little bit today, and AMDW hurt you a little bit today, DD. But a lot of these, you got me. I guess my best performing one of the day was up 0.2%. Woohoo! Big day there, right? Right? Well, we can look at that other stuff. We can look at that stuff later. Let's get into some of the more general interest stuff. We've updated the factor. We now have 466 ETFs. We're following every tick of. We'll look at that in a little bit. Let's look at the Dirty Dozen and see how these are doing. We got Rod in the house. Rodsta in the house. You're late. Work stuff happened. Yeah, man. Work's just so inconvenient, isn't it? I mean, work could be great if it didn't have to happen right in the middle of the day. I mean, anyway. All right. So Murney was crazy. Yeah, no, I hear you. Murney was crazy. Yeah. Okay, so just make sure I've caught up with you guys. Moved last week. Wonder what's next. Can't believe that Oh yeah, Murney. No, that Murney move was absolutely insane. Okay, so this is bad. This is not great. The Dirty Dozen, we didn't have a single one of these lousy things that was up today. The one that actually did the best was LFGY, or did the least worse. I mean, because it was down 1/3 of a point. We had blocks, I'm sorry. LFGY did the least worse. And then we had SEPI down 1/3 of a point. And then we had Cash App down. It's not really Cash App, XSHP down. There's another one that's CSHP, but I'm just joking. Okay, XSHP down 0.5 point, and then also blocks was down 0.5 point, 51 basis points. Then everything else was down multiple percents. GPTY and GX were down 1 and some change, and then the rest of these lousy things were down 2 or 3%. I guess Chippy was also down about the same as GPTY and GX, but then ULTI was down 2%, DRMP down more than 4, KBIM down more than 5, Dreamy down more than 5, Chat GTP, that's not what it is, CGTP down 4.6, Space Eye down. Anyway, whatever. You guys get the idea. So let's look at the 1 week chart on these things and see what bright spots we have. Which ones of these guys are up on the week? Or no, in this case, it's going to be down. Oh, no, it's up. Okay. Blocks is actually up 5% on the week. Second place, Drucky's up 1.5 on the week. And then everything after that, I believe, was down on the week. So blocks and SEPI, the only ones up on the week. Oh, and LFGY. Okay, so it's actually blocks 1, LFGY 2. I'm sorry, KMIM 3, and Drucky 4. So those are the 4 winners on the week. Blocks, LFGY, KMIM, and Drucky. Now, blocks and LFGY, you could explain that because of the recent move, or I think it's explainable because of the recent move in Bitcoin and Ethereum and all that kind of stuff. So, but if we look at a month, let's try to get some happier news here. On a month, we have XSHP up, Drucky up, SPCI up, MEME up, FEPI up. I'm glad SPCI's up. That was really, now granted, it's only up 5% on a month and it's down on the week. But anyway, hopefully that gets going again. Then we have FEPI was also up on the month. GX was also up on the month. GPTY was up a couple percent, a little bit less. Granny was up about 3. Granny, well, I don't know. This stuff isn't working right. Hey, Granny was up. The chart screen, I can see that. So Granny was up a little bit also. Then the rest of them were either haven't been around or were down. ULTY was down the least of the ones that were down, and then was Streamy, KMIM, K-Yield. But then there are a lot of them were just getting killed. DRMP's down like 9.79 on the month. ULTI is down 8.16 on the month. So the recent bounce in Bitcoin sure hasn't helped ULTI out, at least not over the past month. But even over the past week, ULTI is down 6.01. All right. Well, that's it for that one. Let's see there. Let's look at, unless there's something you guys want to look at. If there's some trades you want to look at, we can look at manager trades and see who's doing the best right now. It's Nicholas. We've only been measuring this for 10 days now. And the last 10 days have been great for the kind of stocks that Nicholas, that David gets. But then as far as these other trades, we're seeing, the YieldMax guys are actually up about half as much as David, but they have LFGY and Chippy. So we can see what the best trade, what was the best trade? The best trade on the board is LFGY buying Bitmine Immersion at 18. It's trading at 24. Then the guys over at LFGY, YieldMax bought some ETHA. Boy, that was a good time to do that. Bought it at 14. Sold it at 18. Heck yeah, good active management there. But also at the end of the day, the assets they invest in went straight up. So that helps also. All right. Then they also bought Strategy at 95 and Renet to 122. Great job. Great job, LFGY. But then Nicholas got some IBIT at 35 and he's run it to 44. That's up 26%. And then there's other YieldMax ones. This is all DeFi, the ones that are doing well. Let's look at the bad trades. The bad trades are Rex, ULTI, they're just the Rex ones. Rocket Lab, RDW, which is Redwire, Western Digital, Applied Optoelectrics. I mean, they all can't be winners. And obviously, unfortunately. All right. Well, I see that. But we'll keep following these good trades. As long as Bitcoin and Ethereum keep going up, LFGY and blocks are going to probably look pretty good. I'm just surprised that ULTI isn't able to participate more. But at the end of the day, these are about stock picking, and we can see the picks that ULTI has made since we've been following this. And since we've been tracking the trades, and ULTI's trades are right here. So they don't have a single winner. Well, they bought one. They bought Zeta, ZETA, and that's up 5%. But everything else they bought lately has gone the opposite direction on them. Hate to hear that. Actually, Circle's up, and they've closed out. Oh, no, that's Rex. Oh, but yeah, Rex does ULTI. I'm sorry. Circle's up, and they closed that one out in at 73, out at 87. Heck yeah. And then we have and then the rest of them are all negative. So anyway, ULTI is definitely having a poor week. All right. So anything else we want to look at? I guess we could have done the weekly performance like this. A lot easier way to look at it. LFGY number 1 on the week. Yeah. Anyway, that's good. We'll take it. Let's look at a month like this way. Let me see who texted me. Where is my text machine? Where is that text machine, Jackson? Do you got the text machine? Let's see here. Okay, so no, that was just my sister. All right, so let's get back over here. All right, but yeah, I'm liking this new. I'm liking tracking these individual trades in the Dirty Dozen. There's actually like 22 stocks in here right now, I'd imagine someday we might have 50 or even 100, but I don't want to do all the stocks. I want to do all the ones, all the ETFs. I want to do all the ETFs where the manager's skill comes into play, so we can track the managers. But let's see, I haven't even seen what that is yet. That's a bust. Anyway, whatever. We're gonna forget about that. Let's go to auto callable world. I know some people are not as enthused about auto callables as others, but that's why I built an attractive, hopefully, dashboard to keep an eye on these and see how they're doing, and not have to spend too much time clicking on stuff. Anyway, so just an overview. 1 day performance. We did have some auto callables that were up, and in fact, if you look, it looks like about half of them were up. I need to make that, well, maybe not quite half, about 40%. Anyway, the ones on the good list today were AC2, MPIM, PAYM, ACYS, PayH, SBAR. And then we had a couple that were basically flat or, up a little bit. But then on the ones that were down, it's all these right here. And the worst looking one of the day was this XXV from Simplify. And I also put the benchmarks on there. I mean, these auto callables are based on stocks. So when stocks are down, they are too. I mean, most likely, maybe not down as much, but you can see the SPY was off today. So you can see that everything above this line, at least the one saying XV was down, but it outperformed the SPY. So did MPDY, so did ACYN, so did CAIE and DACL. But then all these other ones underperformed the SPY, and heck, XXV underperformed the Qs, unfortunately, today. We can look at the beta, and the beta is kind of a measure of the correlation to the market, and you can equate it kind of with, I think kind of with upside performance or something. Anyway, MPDY has the most upside potential, at least according to the beta. At least that's what the stats say. CAGE, which is an auto callable that doesn't really pay yields unless it has to. It's more focused on growth. That one has a high beta, and I would expect that. Now, this DACL is supposedly a defensive auto callable, I think. Let's go look at that. But anyway, its beta is looking good also. DACL has a 50% downside buffer. So that's a bigger buffer. Some have 30 or 40%. So DACL's has more room to breathe. But it's not defensive. It's not a short or anything. It's not an inverse fund. All right, so those auto callables, I guess they're looking all right. Let's sort it by AUM and see who has the most AUM. There we go, ACYN with all the AUM there. Then we have CAIE with 1.1 billion, SBAR with 400 million, ACYS with almost 300 million, CAIQ is hanging in there with a little bit more than a $250 million. PAYM has more than 100 million at least. Cage has about 125 million under management. AC2, XV, and XXV all have at least 50. The rest have under 50, and the smallest one is this MPIM. So we'll watch those. If there's anything you guys want to look at with auto callables, let me know, and we can, and we can check it out. Let's see, select all, select none, performance. Okay, I think we've pretty much covered these, but of the ones we follow, we have about 4.5 billion under management. So these are getting more popular. All right. So now if you guys want, the synthetic leverage calculator, this calculates the leverage of OVL and blocks. I'm going to add QLDY. It's not real leverage, of course. It's poor man's leverage, synthetic leverage, situational leverage. It's not borrow money leverage, but still, that's why it's important. On the things where you have a fund that has like the borrow money type leverage, like TSLW. It's pretty easy to tell because it says cash -100. You can see it. They have to carry it on the balance sheet. But on these ones like OVL, for instance, doesn't have any negative on cash because it's not real leverage. They aren't really leveraged. They're using situational leverage. And so anyway, I built this so we could keep an eye on these a little closer. But right now, bottom line is OVL is levered about 1.24. So, think about this. Roundhill leverage is about 20%, right? This is levered about like that. Now, blocks also has synthetic leverage. It's harder to calculate because you have to calculate the synthetic leverage on each position and then figure it out. But blocks comes to 1.21. You can also see the amount of the thing is on leverage that you have to borrow for. It's constant leverage. If it's 20% leverage on the borrowing type leverage, you go down, 10%, and the funds down 12%. It's a fixed. That's what's so great about these lightning spreads is you don't have, because of the defined risk. Once you pass through the leverage, you don't have any additional loss. So the leverage varies depending on where you are on the curve. So, but anyway, the average leverage is about 1.21. So like I say, we'll add QLDY onto there. And really, I could add GX also. Anything that does lightning spreads, we could add OV, SOV. Anything that does lightning spreads will probably end up being on our leverage calculator. Okay, poor man's leverage calculator, synthetic leverage. We've been talking about synthetic leverage. Synthetic leverage is in the news lately, right? But heck, we've been talking about synthetic leverage, poor man's leverage, since, I don't know, how many times have I told you guys, well, these are great, but you got to remember you're double long, you're double levered. These are actually double levered, but only between the strike prices. So, so on top, you aren't levered at all if it's outside of that area. So in any event, now here's I did this calculator, but here I'm like, here's a little lesson right here. You can tell yourself how levered any lightning spread is. So let's just use the SPX for an easy example. In this trading around, I guess we'll just use the strike price for the, anyway. So like on this put spread overlay, they shorted the 77.50. They bought the 76.50. Okay. To figure out the leverage, all you have to do is take that 100 points and divide it by 7,750 points. That gives you your total exposure. And that right there comes to a third of a point. But then you also have to factor in the contracts and other things. But that's basically what you're, if you have it, here it is. If you're doing a synthetic, a put spread overlay on the SPX, and your strike's 100 points wide. What you're agreeing to is to lose an extra 100 points if it goes against you. So that's how so instead of your max loss being 77.50, now your max loss is 100 points higher. But anyway, like I say, it's just over a certain range. So that's why I had to build this calculator to figure it out. And but anyway, all right. So we have that. You guys have any questions about synthetic leverage? I'm happy to address it. Jackson sold your text machine for, yes, he did sell the text machine. He sold that text machine. Absolutely. All right. Yeah. So what you guys are just talking amongst yourself, that's good. Oh, you're going to sell some calls on your VIX leaps, but decided to just hold his insurance. Yeah. Not a bad idea. There's also the idea, I don't know if you have two leaps, but if you do have two leaps, you can always sell one call and then you're half long. If VIX blows up, you still have some exposure to the upside. But yeah, if you just have one leap, you can't really do that. But you might have 5 leaps also, and you could sell two short data calls against your 5 leaps and you still have 3 long or something. All right. I love that trade. How long are you Rod is doing, not Rodsteman, but Retires doing a similar strategy. So is Jonathan, Ambassador Quan. I'm surprised they aren't in here. So they're going out to the 27th. You're at the 1450 strike. You're braver than they are because I think they have the 23 strike. So you have more coverage, but also more risk, but you have more beta and more deltas. You have more VIX deltas, but they have a little bit more leverage. And that's, if I remember, I think they're at the 23 strike. NVIDIA falling the 7th day in a row. What is going on with NVIDIA? I mean, let's get out a daily chart and see where NVIDIA is versus its moving averages. Okay. Yeah, I mean, it's still well above the 200. And outside of last April and a little bit in March, it's been living above the 200, and it's an upward sloping 200. So that's just a recipe for a beautiful looking chart. In hindsight, touches of the 200 would be decent places to get involved on the long side. Now, not in April, you would have got burned on that one, but you would have done all right on the last 3 or 4. Anyway, but that's hindsight. Let's look at it compared to the 50 to get a little bit shorter term perspective on it here. See if you're still holding the 50. Oh, you're right at the 50 on that one. Well, I mean, but the 50 though, you could see hasn't been really as trendy as the 200, because the 50, was sloping up, then it sloped sideways, it sloped up again. Now it's sloping sideways to kind of down. So I mean, bulls, all I know is this: bulls really want to defend the 50, obviously, because if it gets under there, you know what I'm saying, it could go down and challenge the 200. Although if that happens, that might be a good spot to get involved. At least it has been lately. Rod, what are you doing? You're going to buy some leaps tomorrow on the VIX? Heck yes. Now, do you guys are using the VIX itself and not UVIX? And there's advantages and disadvantages to each. The VIX is probably a better plan. I'm not trying to say it isn't, because it's an index option. You get the 60-40 treatment. It can't be assigned early. Well, plus there's nothing to assign. There's no VIX. It's just there's no VIX shares or whatever. So anyway, but it has a little bit different ins and outs. But your NVIB says, please go up. Heck yeah. Heck yeah, JG. Thank you for joining us. I didn't notice you slipped in here, but yeah, you're here. There you are. All right, we got a pretty good crowd today. Okay, so we have some other stuff to look at. I'm just trying to remember what it is, but I just lined up windows with stuff I wanted to talk about. So no more questions on synthetic, poor man's leverage, situational leverage. Anyway, we'll be looking at that every day from now on, and that graphically better. Worth. We haven't talked about Worth. Last week, they had 33 or 36 strangles on. Well, a lot of those expired on Friday, and they haven't replaced a lot of them yet. But look at this. This is brave. They put a straddle on DRAM. I mean, so they sold the 62 strike call and the 49 strike put, and that expired today. Wow. Does DRAM have? There's no way DRAM has. There's no way DRAM has. Let's see. Has Monday, Wednesday, Friday expirations? Do they, or is that just I think that's got to be 26, 28, 30. Well, they darn sure do. Would you look at that? Monday, Wednesday, Friday, Monday, was there heck? And I wonder how liquid these are. So this one right here that I pulled up and at the money call, but going out about a month, is bid at 216, asked at 273. I mean, I've seen worse. Let's see what we could get. What a Wednesday call would cost us, as far as bid at $1.44, asked at $1.75. There's 342 is the volume. Open interest 161. Like I said, I've seen worse. The IV 74. So, I mean, that means the fund that sells options on these, especially in the manner that a YieldMax does, what it means is a fund like this might kick off about 74%, a 74% distribution, because that's what they do, is they monetize that number. Now, Worth is a different deal, because we're selling on both sides. But anyway, let's just put the Worth trade in here before. See, we can go neutral, short strangle is what Worth is doing. They're doing short. I know theirs expired in DRAM, but let's just pretend like they going out till Friday. Let's just pick one going out till Friday. So yeah, that's what a short strangle gives you. That's the profit and loss graph on a short strangle. So you could do something like, if you could do something like this yourself. It costs you $195. Now your max loss is infinite, because it's on the upside. But what they'll do is they'll buy a call out here somewhere. They'll buy a call way out here, typically. But anyway, so now we can look at, so it takes $10 off your credit. A trade like this, your credit's $182. Max loss is 5,000, and that probably happens if it goes to zero. Yeah, which we don't think is going to happen. I mean, but that's just that's your max loss. Bring in $182, and by Friday, if it hasn't moved outside 52 and 57, you can keep that money. This is pretty much the strategy that Worth does. So let's see what else they have going on, but they don't have any. It doesn't look like they have any options in trouble yet. They also shorted gold, or they shorted the GLD, but they just sold puts. They don't even have a short call, but they sold a put on gold. So selling a put, that's basically the first step of the wheel. Now they're probably going to leg into a call. Maybe today they'll also have a call and they'll leg into. I would imagine they leg into it, but on some of these they just established with the put. On ICE, the Intercontinental Exchange, they established with puts. So Lockheed Martin, they sold a call. Now that's gutsy. There's no way that's even right. You can't just sell a naked call. That's crazy. It's absolutely insane. Well, I had the sheet up earlier. I had their trades up somewhere else. Anyway, I think I shut that tab because I was trying to get ready. It's probably not that interesting. But a short call. Wow. All right. Well, anyway, on Worth, let's see. Do they have any? Okay, here's your typical thing they usually do. Sell a put, sell a call, and then buy a way out of the money call for protection. They did that on USO. So they're betting that oil volatility collapses, or that it doesn't. USO doesn't go over 139, under 117. So far, they look all right on that. They entered with the short put on Tesla. It's almost through their strike. I mean, they only have 1.5% left, but that expired. So that was maybe that was just a one-day trade. Okay, they did a two-day trade on XLE. They sold a strangle. On USO, it's a two-day trade also. So, all right. Well, let's look at some other stuff. I think Worth, fun to follow. Let's check out the chart of Worth. It's still third place behind the SPY and behind SPY-I. Those aren't bad things to be behind. Worth is a lot steadier. Worth didn't drop as much as SPY and SPY-I and SPY did, but it doesn't grow as much either. All right. Well, portfolio holdings. Yeah. And this is all their positions. Okay. So we're done with Worth now, unless anyone has any questions on Worth, and we'll see what else we have here on we got Chris in the house. Hey, Chris, what's up there? Well, we've already done that part of the show, and XXV was actually our worst performing one of the show. I'll look at that though. We can look. My opinion on that one is I would go ask Marcus. He follows those so close, but I'll look real quick. So they're basically the same trade. They just have different size distribution targets. So I remember this one from when it came out. Oh yeah. Okay. So let's look at the mechanics. So XV means XV is in 15. So it's going to try to pay a 15% yield. So you should get a little bit more than 1% a month, maybe like a 1.3% a month. And so far it looks like they're close to doing that. Now what you're actually betting on is you're betting on what's called a worst of feature. So you just don't want the SPX, Russell, or NASDAQ. You don't want the worst one of those three to drop more than, to go down more than 22.5. So, because the 77.5, you take the inverse. So that's where that's where you get in a problem on that one. Now that's just one of their things. They also have one that's the same amount, but it expires, or they may have bought it on a different day. They're just probably laddering these in. But yeah, so this one is a bullish bet on the SPY, Russell, NASDAQ. You just want the worst of them has to be above 22.5 before this one gets in trouble. 22.5 is kind of a low barrier, in my opinion. But let's look at XXV. Okay, XXV is in 25, XX 20, and then V. So I bet on this one, I'm not even going to look. I'm rolling it up. So on this one, because it's paying out more yield, it's going to have to even scoot your worst of features even closer. I think this one might even have less buffer than XV. Let's see if I'm Let's see if I'm right. And no, I'm wrong, but with the caveat, they're using single stocks. Single stocks have a higher IV, and so these auto callables have a higher coupon and whatever. But so what this one's about on is CoreWeave, Oracle, and Corning right now. GLW is Corning, right? GLW is that Corning Glasswork. Anyway, but whatever GLW is, you're betting on those. It's not a washed up feature. They're individual auto callables. You just don't want CoreWeave to drop more than 40%. But if it does, you aren't going to be getting the income from that one anymore until it crosses back above. You don't want Oracle to drop more than 40% either. And you don't want GLW. GLW is Corning. There's no way it's not Corning, right? Yeah, it's Corning. Okay. And then also, because these guys use a little bit of leverage, or they don't really use leverage, but they use, because they don't spend, well, it's not leverage the wrong word, but they don't spend all their cash. They don't put on positions with all the account. It looks like about half of the auto callables are still an S-bill, short-term money market type stuff, a government money market. So, and of course that they need that to collateralize these also and other things. But I would, if it was me, I like indexes. I think XXV. I also think a high yield, or XV, if it's me, but let's ask Marcus too. But if it's me, I'd say go with indexes, and that's, I'm just not into single stocks. Those CoreWeave could drop 40% in a day. I mean, and so could Oracle. Now, not really, but I'm saying, in a week it easily could. So I'm just an index guy. Oh, the other thing I think that the thing that's so ironic about these high yield funds is the thing that everybody likes about them is the high yield, but the high yield is like a anchor around their neck. The high yield is what is a big factor in what impedes the total return and stuff. And as you guys have seen lots of times, and not just with auto callables, you find a fund that pays a 50-100% yield, and oftentimes that's the fund with poor total return. Not all the time. Dividend Degenerate knows how to find those that do well also, but like AMDW and stuff or whatever. But we got Oracle in the house. We got Rod up in the house. Yeah, VIX is up today. I doubt it was up enough, Rod, to help your call out. I bet your leap, it didn't move enough to help that leap out, but maybe it helped out a little bit. All right, so let's see what else we have going on. You're okay. So you've got everyone into the leap game. You and Dividend Degenerate have got people buying leaps in VIX. But anyway, a VIX leap is a hedge. I mean, okay, so we've already looked at this. So I'm saying XV, but if you guys disagree with me, put it in the comments. DD, add the direction income blast. Oh, yeah. So you're trying to give him advice to beat me on the freaking game. What are you talking about? JG, I'm going to have to put you on mute. We're going to have to put him in timeout. You're helping the enemy. Come on now. Coasty, oh, you got some TMG in today? Heck yeah. Heck yeah. Help XXV before it's a gamble due to the high payout. I'm just saying, other things being equal, always take the lower payout if you don't know anything. So that's why I was leaning towards XV. I mean, because it's low, but it's not like 2%. It's still 15%. But if you don't know anything, just go for the low payout. That's what I say. Where is Marcus? We need to get Marcus in here. We do got Oracle in here. Well, I know that. I'm not pushing him. I'm like ESPN. If I'm covering the SEC, or no one cares about the Atlantic Coast Conference either. But ESPN still has to talk about it because some people do, because part of their audience does. But I'm trying to make it as painless as possible. I made the graphics better, and I tried to go as fast as possible. I'll do the auto callables first from now on, and then you can jump on, wait 5 or 10 minutes and jump on, and you won't have to hear about them. But how's your GPIX doing? Let's look over here at GPIX. GPIX. Let's look at this chart on old GPIX. Down a quarter point. That's no big deal. And they go X soon, I think. Boy, that's a good, for an auto callable. Think about that. That looks like a stock. I mean, you know, because not auto callables, for a high yield fund. You know, a lot of high yield funds, you know, go sideways down and to the right or whatever, but not GPIX and not OVL and not T-SPY. You know, there's a handful of them that just pretty much move about like stocks do. But GPIX and OVL are part of the good ones. You were thinking about that, JG. Everybody's in the house. We got a crowd here. We got 19 people here. Oracle, go tell Neo that crap. Okay, well, that's what I'm saying. I'm like ESPN. I'm just reporting the news. We all don't like the Atlantic Coast Conference. Some of us like the SEC. Some of us like the Pac-10. But we're going to cover all of them. But yeah, I'm not saying that the auto callables are going to win the national championship. All right. So, hey, yeah, Chris, I hope that helped. But really, the best thing on that is go ask Marcus. But honestly, though, this sheet right here comes from Marcus's information. I turned Marcus's information that he puts in Discord. You can get out Discord into a sheet and just with live prices. So we'll stay on top of it. If there's, like I say, I'd be happy. You know, if it was up to me, I would just talk about all day long about index-based covered calls, you know, but a lot of people like single stock cover calls. I don't like them, but I'll still talk. I don't like them. I'm not pushing single stock cover calls, but I'll still talk about them. Fish is here. What is up, Fish? And we got Brad in the house. We got a crowd. I haven't had 21 people here in forever. Okay, so let's see what else we have to look at. Oh, yes. Let's look. We haven't looked at the SEC, and I know a lot of people probably don't care about this, but I tried to spend about 5 minutes on you know, Dirty Dozen, auto callables, SEC, and we look at the fantasy league. And I know probably no one cares about the fantasy league except me and DD. But anyway, all right. So we're just trying to cover it all. So here's the new ones that got announced today that are coming out. Oh, there's one from Twin Oak. This doesn't mean anything to you guys, but I've had the guy from Twin Oak on before. His name's Greg Stoner. They told me back then about this fund he was coming out with. We aren't going to look at it right now, but Greg's fund that he was on talking about on our channel was T-Oak. He used to work for Michael Burry. That's where Greg got his start. He worked in Michael Burry's family office. He went out on his own and was a co-founder of Twin Oak. But yeah, T-Oak is one of these funds. It's a box spread fund that just goes, you know, that does the same thing that money market does basically. Anyway, so I'll look at that on my own time. I'll be interested to see. It does look like it tracks the S&P. Like I say, I'll look at that on my own time. Okay, Defiance is coming out with double long Astera Lab. I mean, I don't know about double long Astera Lab. I mean, not for me, but frickin' DD will probably put it in his fantasy lineup. Anyway, there's the Israeli 120 KSM. Our friend Ofer might be interested in that. I've already sent him the prospectus. I don't see him in here. Mayor, he goes by Mayor one place and Ofer another place. Ophir, OPHIR. All right, so themes. What's that one? Leverage. I just don't care for leverage. Hedgeye is interesting. Let's look at this one. So Hedgeye is a guy named Keith McCullough. This one is the Hedgeye Hedged Bitcoin ETF. Okay, seeking long-term capital appreciation. So it's not an income fund, but it says strategy, minimizing the net gains available for distribution. Well, I want to see how they hedge it, but that's just I'll look at that on my own time too. So I'm going to put hearts on those and come back and check these out later. On the ones I'm interested in. Okay. BlackRock Unconstrained Equity Fund. What in the heck is that? Have you guys heard of this one? Tracks Russell 2000. Let's look at this. Unconstrained equity. I like the word unconstrained. I don't like ever being capped, constrained, whatever. But let's see if real quick I can see anything about this. It's just long-term capital gains. So, but principal strategies. Let's see. I'm just reading it real quick to myself. It's just, they're going to have everything. It looks like they're going to have global securities, common stock, preferred stock, warrants, deposit. It looks like a fund where they can just buy, anything. Anyway, corporate bonds and all that kind of stuff. So that one's not that interesting after all. Here's the BlackRock Equity Dividend Fund. Now, equity dividends are somewhat interesting to me, but it's probably not that interesting. I love market neutral funds. Market neutral funds are actually interesting. Market neutral funds are those long short funds like NIHI is somewhat market neutral, DBMF, or it's long short. So anyway, I guess BlackRock's getting into the game. And it's a global equity market neutral fund. It looks like it's just a converted mutual fund. A lot of these things are just mutual funds that are being converted. Portfolio turnover, principal investment strategies. The fund intends to be market neutral, which means the fund seeks to produce returns that have low correlation to the returns of the equity market. Like I say, we've seen these before. IALT is a somewhat market neutral fund. DBMF, DBMF, or where they don't have a lot of correlation to the direction of the market. NIHI is right, or is that? Yeah. Well, no, not NIHI. Is it NEHI? No, that's Ethereum. There's a market neutral NEOS one too. I'm just drawing a blank up. Marcus is here. All right, Marcus, I had to give out advice, and my advice was to go ask you, what's your pick, XXV or XV? If you had to pick between those two. Somebody stuck a gun to your head, which could happen because you live in Philly. I'm just joking. I like Philly. I'm sure you live in the good part of Philly. But anyway, no, which one do you take, XXV or XV? I said XV because I'm at Panikin and it had a lower yield. All right, Retire. You sold a 23 strike call on the VIX 2 weeks out, $40. You have 3 leaps. Okay, good. You're doing the 3 for 2. I love that. So that means you're even, that you're long one no matter what happens. Right. And you can do well on the other one too, but you're capped at 23. Anyway, nice job there, Retire. Greg bought him 1,000 shares of NFLP near the low. Maybe NFLP'd be a good one to look at to go get in the, heck yeah. Do you mean the low of the day or you mean the low a few weeks ago? I haven't got a chance to use the equalizer yet, and I really like the equalizer. I was just using it a second ago to compare blocks with IBIT. And, of course, blocks is slamming IBIT. But let's do this. The equalizer is really good at comparing things that are the same underline. So we'll do NFLP and we'll do NFLW. All right. Now, I know NFLW has leverage. We'll do NFLY, though, because it doesn't have leverage. All right. Now, let's do that. Now, NFLY pays a bigger dividend, but wonder if NFLY only had to pay NFLP's dividends. So we're going to say ticker 1, NFLP sets the dividend, and let's see what kind of total return we get. Now, NFLY is going to be buying some of its own shares back. So that might help or might not, depends on how their shares do. All right. So that's a win for NFLY on this. But VU beat both of them. Let's just look at it graphically. So now this, how far back does this go? This is since inception. There's some pretty good history. NFLP's been out since 2023. Yeah. NFLP's been out. That's when I started my station, was November of 2023. And I remember it was out then. Anyway, NFLP and NFLY for that matter were both out. NFLP was doing better most of the time. And then in about 2024, NFLY started doing better. I'll tell you why that is. YieldMax used to have capped upside on the recovered calls where they were 100% capped out. But after about a year, they switched to spreads. And so spreads give you a little bit more potential for upside. And so then as the market took out NFLY, when NFLY is less capped, NFLP is totally capped. And there's other differences too. NFLY uses weekly options. NFLP uses monthly options. Anyway, so NFLY went to the head of the class. But then after the pullback, NFLY still looks better. All right. So let's say we only need a 12% yield out of these. Then let's see how that would do. Let's run it against a 12% yield. Now, but to be fair, the just selling shares of the VU ended up beating either method. Although for a long time, the VU method, the VU's the green dotted line. For a long time, like a year and a half, the VU method was sucking. But as Netflix has pulled back lately, the selling shares of the VU went back to the head of the class. All right, so at the 12% level, it's the same thing. That's a good look for NFLY. NFLY is probably one of the better ones. Not lately, but it used to be a really good one. So let's do this. Let's say if NFLP had to pay NFLY's dividend. So watch this. We'll just do ticker 2 sets the dividend. So that means NFLP is probably going to have to sell shares. And I think this will make NFLY win even more, but maybe not. Let's go look. And we need to look at the share count change also. I should have been showing you guys that. All right. So on this version, yeah, NFLY still comes out a little bit ahead. But not by as much. And see why that is? Because NFLY's yield is insane. It's crazy. So the total, because it's such a higher yield, whenever we indexed it to NFLP's yield, both of them did better but whenever we indexed it to NFLY's yield, I mean, NFLY still did better, but you started off with, I guess you started off with 10,000 and you have 11, or you have, you only have 4,400 in NAV. Now, granted, the dividends helps your account value, but if the NAV is what counts, which, your NAV of NFLY, if you were spending those dividends, would be down to about 4,400. I mean, you'd had a good time. I mean, you definitely got some money. You got $11,000 worth of dividends. But we can see here share count change. See, that's what happens when we index it to NFLY's dividend, which is higher. NFLP has to sell shares every month to match the dividend. And so, and you can also see if somebody was doing this with the VU, this is how many shares of the VU you would have to sell to match up with NFLY's dividend. But still, net at the end of the time, even after selling all those shares of VU, your NAV, actually, I take it back, 30. Yeah, actually, on this time frame, not this time frame, but on this level of dividends, NFLY is actually first, VU second, and NFLP's third. Yeah, there it is. See the VU's the green dotted line. Even the VU can't handle paying out a freaking 50% yield, or whatever NFLY does. I need to. May even be more than that. Well, it goes up 57%. 57% to pay out for any assets, just gigantic. Gigantic. All right. What is going on now? Oh, you aren't going to do that? Okay, we'll see. I'm just joking. I was just giving Dividend Degenerate a hard time. I'm just giving you a hard time. If it wasn't for you, it'd be, anyway, I would be looking even worse. I'm not looking great being second to last. And like I say, as soon as you hit one of your degen plays, you're going to pass me like I'm standing still. What is up with the increased interest in box spreads? Yes, now Granite Shares is making L box. Yeah, and of course, isn't David coming out with one at inbox or something? Anyway, yeah. So I hadn't seen the Granite Shares one. I hadn't seen that. I don't know about that. But we'll keep an eye on that. I mean, box spreads aren't all that interesting to me because it's the same thing as a T-bill. Now, a T-bill is ordinary interest, and a box spread, I bet you they can find ways to make it rock. I'm sure there's advantages, but I think it's probably dealing with taxes, because that's the one thing about T-bill interest. I'm always saying that I like synthetics so much, and I do like synthetics because, as you know, then the fund could buy T-bills, and the T-bills pay a couple percent, and that adds the return. And since the synthetic and the stock are basically the same anyway, you can get a little bit extra return. Well, but what I'm missing, or part of the problem with that is, yes, you do get a little free money, but the T-bill interest is taxable to ordinary income. So, so that's another case for the method of using real stock, because on real stock they can do tax stuff to do heartbeat trades and stuff. You going to buy LBox, Marcus? Good question there. Good question. You barely made a profit on XXV when you sold your shares in May. Heck yeah. Mark is saying he doesn't need it. He says the combination is Will plus ACYQ plus GFLI, and that equals comfort. Okay, well, this is a good place to show you guys this. This is why I didn't get any sleep last night. This project, right? Right. Where is it? This project right here. Okay. So, all right. So, what are those again? That's WEL. Hang on here. WEL. ACYQ. Okay, ACYQ. Oh shit, it's too young to be in here. We're just gonna put ACYN in to have something to look at. I just want something, we'll just pretend like it's ACYQ. And then JFLI. Now I think JFLI may be too new. I put it on the spreadsheet. No, it's here. Okay. I just wanted to show a comparison, show what I've been working on. So let's run this back here to max time frame. Yeah, I just think this was interesting. You know how we're always going, well, I'm always looking at how much a fund pulled back, and I'll say, well, which one pulled back the most? But like we can look, we can say, okay, JFLI pulled back the most over that time frame. It was down 3 where Will was only down 0.74. And then also we can down here's the Sharp and the Sortino ratio for just this area. But, normally you aren't going to want to be that zoomed in. But let's say you wanted to look at off the lows, how these have performed, or you want to look back to a certain date. You can pull it back to whatever dates you want. And, so then the cool thing is this changes. See up in the upper left-hand corner, the watermark changes live depending on where you put it. But anyway, so here's something that's interesting. So I'm trying to do something to kind of try to prevent cherry picking, but there's no way to prevent it. But I was trying to make a tool that can detect. Anyway, just check this out. So the one that's on top on the watermark is the one that has the highest return. See, there's JFLI, highest return, but well, JFLI has been on top, but notice Will gets the star. What's the star? The star is the one with the best risk-adjusted reward. In other words, Will has a 5 Sortino. JFLI just has a 4.6. ACYN just has a 3. You can also look at Sharp, but it's in the same order on Sharp. So yes, JFLI made an extra point. But the thing is, JFLI is in second place on the chart, but off of the lows. Remember, we're measuring off of the lows. So off of the lows, yeah, JFLI is up a little bit more. But according to Sortino and Sharp, WEL was a better play. But anyway, and let's go off the recent lows. Off the recent lows, JFLI wins on Sharp, Sortino, and it's the one that's up the most. Although off those lows, there's not a huge difference. But then on the whole chart, it's all about will. But actually, ACYN for the whole chart has the best risk-adjusted reward, and I can see why. Look at ACYN. It didn't even hardly drop in that pullback. That March didn't even hardly drop. Now it doesn't go up super fast, but it's a lot steadier. They're close. One's up 6.5, one's up 5.5, one's up 4 5/8. But the ACYN gets the nod from the star. So I thought that was somewhat interesting, or I thought that was really interesting. I love these deep stats. Oh, you guys are going to like this, or I don't know. This is something I'm going to like. I hope I'm trying to get you guys excited about this kind of stuff. But let's check stuff that's been in the news lately. Let's check blocks, and let's check. I always like to check blocks and BTCI, or we'll do SEPI. Yeah, we'll do blocks and SEPI. Doesn't matter. We can also throw in LFGY, but let's just check on some of this kind of stuff. And let me show you what I did that I think is cool. Okay. So, here's the deep stats for the whole chart for the comparison. However, the one that's in first is kind of the feature one. And so you get the detail metrics over here for blocks. Okay. Well, so, it has the name, has the AUM, has all that kind of stuff, has the health score. Not super healthy. It has plenty of AUM, but its recent performance is knocking its health score down. But it's it's probably not. It's going to be fine. 30% chance it's around in a couple of years, according to the health score. But what I'm so excited about is see this beta right here. The beta of blocks to the S&P is 2.88. And that, of course, we'd expect that. Is sometimes it runs almost 3 because it's about 3 times as volatile. It goes up about 3 times as much down, about, something in there. But we have an alternate beta because really what we want blocks' beta against, well, it could be against a couple of things, but we could look at blocks' beta against IBIT, and just to see how correlated they are with IBIT. And it's only at 0.93. Meaning blocks is actually not fully correlated with IBIT. But anyway, we could do things like this all day long. We could also look at blocks' correlation with the Qs because blocks has a lot of tech stocks in there. Blocks' correlation with the 2s is 1.99. And the reason the number's lower is because the Qs go up and down more. So blocks is only about twice as volatile as the Qs. It's about 2.8 times as volatile or is correlated with the SPY. We can also check blocks against a meme stock fund like meme because, let's see the correlation there. Okay. So blocks is only half correlated to the meme stock fund, meaning it's not that super related to it. And it's a little bit less crazy than that. But anyway, I like this alternate beta. This gives us a lot more things we can look at when we're trying to benchmark stuff and that kind of stuff. Also, speaking of benches, we can put a benchmark on here for these. I use the 50/50 tech Bitcoin benchmark for these types of stocks because they're about half tech and about, half Bitcoin, Ethereum and stuff like this. So you can see right here, the little dotted line is the bench we made up, and blocks has been killing the bench a long time ago, but also to be fair, all 3 of them were killing the bench. But then lately off the March lows, the bench went right up here to the top, and blocks was, and SEPI was actually performing best off the lows. Let's look at this. Yeah. So, SEPI's up 16%. The bench is up 16 also, a little bit less. Then we have LFGY up 14. Yeah. Blocks only up 1.96 over that time frame. And that's what's hurting. That's one of the things that's hurting blocks' health score is its recent performance. A really healthy fund should have as much AUM as possible and should also have good recent risk-adjusted performance and even good lifetime risk-adjusted performance. Anyway, but But let's see how these other ones are doing on health. SEPI's health. SEPI only has 110 million under management. It's less than Blocks, but their health score is a little bit higher. Instead of 30, it's 40. Well, SEPI has better long-term growth and better short-term growth for that matter. So, it still needs to grow AUM. We want, for SEPI to be a 70 or 80 or 90%, it has to have like $1 billion, $2 billion, $3 billion. At 110 billion, is holding it back a little bit. But, and then we have LFGY. Now, LFGY's health is a little bit poorer than Blocks is. LFGY has, even less AUM, and LFGY also hasn't set the world on fire as far as long-term performance goes. Maybe we should look at this off the Bitcoin high to the Bitcoin low. Well, or to the market low. Off the high to the lows, the bench definitely won, but SEPI protected your money best over that time frame. LFGY second best, and then Blocks basically didn't protect your money. What we had to do to make Blocks look better is put ULTI on here. All right, so ULTI, now that changes the max time frame because ULTI came out last October. But anyway, over this time frame, the bench, the 50-50 bench, is plus 8.62. SEPI's down a little bit, and the rest of them are down a lot, especially ULTI, down 55. Blocks down 32. That's not great either, and this is total return. Let's throw another contestant on here. Let's throw K-Yield on here because it came out the same day as ULTI, so let's throw it on there. So K-Yield is the purple line. I know you can't see down there, but really the part we really want to see is this part. So I need to work on the UI, UX, whatever. But yeah, K-Yield was ahead most of the time, back in here. Then SEPI went to first, and then K-Yield passed it, and then SEPI passed it, and K-Yield passed it, and they're basically right there together. SEPI and K-Yield look like a fairly good match for each other, at least over this time frame. But this is like one of the most alarming things is off the recent high beta stuff topped out June 2nd, right? Or something like that. June 6th, it was like, well, it topped out again like June 13th. It had two little top outs. Anyway, just running it from the June 8th top. I mean, that is a bad look for ULTY, down 42% since June 8th. Between June 22nd and August 24th. So a 2-month total return on ULTI down 42%. Blocks down 20%. No great shakes there. LFGY down 12%. K-Yield down 11 and SEPI down 10. It looks like it's SEPI and K-Yield's one. It's SEPI and K-Yield obviously are the ones that look impressive on that one today. Anyway, we'll start doing that stuff more often. If you want to look at deep stats on anything you have, just put it in here and we can run it against whatever. We can check a custom beta. We can whatever. I can even build you a custom benchmark. We probably ought to build some more custom benchmarks that explain. I have some ideas for some more benchmarks. All right. You thought Curve saying, no, I don't think that's true. I don't think that's true. I think Howard, okay, I don't know. I'd have to check into that. I shouldn't say I don't think that's true, but I have heard that too. And I looked into it and I couldn't find any evidence of it. Howard has talked about Delta One with regards to K Gold and K Silv. And I've never heard him say that with regards to the single stocks, but he might have. And so anyway, you guys let me know what you guys know about that. Have you heard Howard say that? And I'm not saying anything bad about Coasty. I'm not saying there's, a covered call strategy that's totally capped, even just because I don't like totally capped, and I don't like monthly options for that matter either. But who cares what I like? Sometimes, depending on the type of market it is, sometimes the totally capped monthly strategy is what you want. I wasn't trying to throw shade at NFLP. I will say this, though. Every which way we looked at it, it didn't look as impressive as NFLY did it. I mean, it just, I didn't, all the little different scenarios we won, it wasn't as good. But on the Delta One, let's look at that. I think we have another way to look at that. What we could do is we can look at the beta, and the beta is not really the same as Delta, but let's see what their beta is. Let's see what the beta is to Netflix. Now, and that would be close to like a Delta. I mean, that should give us a good idea. So let's look at NFLP, and let's look at it on a custom benchmark. NFLX, apply. Okay, so there we have it. Quite a bit behind. It's like I say, it's monthly options. It's totally capped. The curve ones don't get as much upside, even with the Delta One. I've never seen a curve one that gets the upside of the Yield Max ones. But also the curve ones also pay a lower yield. So that means they don't have as much built-in erosion. I'm not saying the curve ones aren't good, but just as far as upside goes, there's that, like I say, Yield Max just is less capped. But anyway, okay, but let's look at this. So let's look at the beta to Netflix. So this will show the correlation between NFLP and NFLX. Okay, and it's 0.89. So that means NFLP is about 90% the same as basically NFLX. It's about 90%. But now let's look at NFLY. And let's look at NFLY right here. And let's check out their custom beta. So is this NFLY? Yeah. All right. So their custom beta is 0.89 also, it looks like. I don't know. I think that may have just not updated. But if it did update, it's saying it's a wash. Okay, no. NFL, actually, that's NFLY's beta is a little bit lower than NFLP's. In other words, NFLY is a little less correlated to the benchmark. But anyway, it's still, when something's 70 or 80% correlated, it's still pretty much the same. It's not going to be much different. Something that's alarming about NFLY, I just noticed with my eyes right here is, let's do this. I think this is jacked up. Okay. Something I just noticed here. And this is a pretty short time frame, but I guess we should get NFLP on here also. Let's go off this low. It looks like NFLY has really, really struggled off the low compared to the stock. And so sure enough, the stock bounced 18% and NFLP bounced 19%. That's the first one that NFLP has won on. But look at that. NFLP that we've seen has bounced way harder off this, recent low. Let's look at it like on a 3-month so we can see it better. But you can see, right? You can just visually see NFLP, even with the, I don't know. I mean, that right there is making me think, yeah, maybe it is Delta One. You can just look at it. And remember, the Delta One's just an estimate because options have decay, and you can put on a Delta One strategy today, and by tomorrow it could be a Delta 0.8. I mean, so they have to, it's just kind of a shooting target. But yeah, you would say over this time frame, I would say that NFLP is more correlated to NFLX, and that's what we saw on the custom correlator too, because it was 80% and this other one was 70%. Yeah, maybe he is. You know what? I'll look into that because that's the kind of stuff I'm really interested in. I'll look into that and I'll let you guys know. Skeptic, that's why you bought FTQI, ACYQ, good protection, and still have Will also. Heck, don't sleep on Worth. I think Worth looks good. You know what I keep forgetting to do? We need to put Will. We need to put Will on here. I can't believe I haven't done that already. I keep saying I'm going to, because Will's a good comparison for Worth. And I think THTA is, and Worth is beating THTA. THTA is that pink line. Worth is beating it, not by very much, but it's beating it. But yeah, we'll get Will on that so we can start, because those are our stabilizers, basically. I mean, not really SPY I and SPY, but THTA, Will, Worth, those are kind of stabilizers. TNG, what in the heck is TNG? Oh, TMGN, 41 cents. Okay, really 42. We're going to give them credit for that extra tenth of a cent. Heck yes. So let's look at that then. TMGN. All right, so it's trading it opened at 25, got up to 25.50, got down to 22, and it's back trading at 24 and a half. So is that going to be monthly or weekly? That's going to be monthly, right? Yeah. So what's 41 times 12? What's 40 times 12? $4, $4.80, and then $5. So they're paying $5 on something that cost you $25. 20% sounds like 20% to me. Heck yeah. The 20% is kind of the upper end of the sanity belt or the sanity range, where you go from sane to insane. It depends on the underlying, but really 15 to 20% is the, pushing the upper limit for a lot of these funds. Yeah, Chris, absolutely. You're welcome. We should have put XXV and XV on our little new machine and tested out there also. Okay. Anyone heard of Sure Dividend? I keep getting email. Oh, Sure Dividend. I have not heard of Sure Dividend. Marcus is saying they're legit, high quality dividend investing service. You love scaring people with your Ring camera. Blocks is proven to be shit even when Bitcoin runs. Absolutely. And that's what that chart was just showing. The only one who was doing better than lately was ULTI, which is also one that hasn't done great. But yes, in the Bitcoin space, the high yield Bitcoin space, SEPI lately anyway, has looked like a better pick for sure. So like I say, this is like ESPN. Just because I talk about something. Yeah, no, I hear you on that. Blocks, smart piece of shit. Everyone who invested in it would have lost money. That's a true review. Well, but you know what I'm saying? Even when Alabama has a bad year and a bad coach, ESPN is still going to be talking about him. I'm not saying to go out and buy Blocks. Blocks fits my needs, but it may not fit everyone else's. I mean, but also it's because I can't see the future. If I could go back a year, I would have got SEPI. I mean, but that's why we look at this stuff. But you can't go back a year. And by the way, I've seen this coming, and I bought SEPI about 2 months ago. And actually, I sold my Blocks. I sold the Blocks in January because it sucked. And then I bought it back the other day. So, but I've had SEPI for about 2 months, and the SEPI's done a lot better than Blocks, correct. And I only bought half of my Blocks position back. So I may go from here on out, half Blocks, half SEPI. All right. Max Convexity, see if there's an ETF that follows Vanguard's VTV ETF. You can look down here and it says held by, and sometimes you could get lucky and find an income one. But lots of times these are just growth ones that hold it. Defined duration 20, whatever the heck that is. Oh, HFND is an interesting one. But it's not, I don't think it's income. It's a hedge fund replication. It does pay 3%. It's a diversifier. Gosh darn it, my text machine keeps going off. Who's texting me? It's probably Brad telling me I need to start talking about some closed-end funds. Right. All right. So on this one though, seriously, on VTV, now there's some ones coming out from Nicholas, and they're covering some of the Vanguard stuff, and they're covering a Vanguard value one, aren't they? Heck, that's what we have this for. Check this out. And it's in my hearted ones. We go to the saved only. And let me find the Global X, Tracks, NASDAQ, Magnificent Six. Oh, that's not it. That's not it. Ultimate Round Hill Overlay. No, not that one. I have the prospectus in here somewhere, and I was going to Vegas Shares Calamos. Even her. Well, anyway, I'm not seeing it, but I believe there's 4 of them coming out. One tracks the VU, but one tracks. I think the other one is a growth one, not a value one. But there's 4 of them. Maybe the next one's a value. Where's Marcus? Marcus, do you know of anything that tracks the Vanguard Value Fund? People have been asking lately. I've been hearing a lot of people wanting them to build something or somebody to build something that tracks one of the, like SPMO, one of these momentum indexes, that owns this. And then, I mean, wonder if you could do lightning spreads. Somebody like Overlay Shares could use this, and then they could sell SPX put spreads, creating unlimited upside plus a little bit of yield. And there's a little bit more upside in SPMO than there is in a bullish market than there is in SPX. Year to date, SPMO's plus 26%, 22%. Okay. And year to date, the SPY, what's the SPY up year to date? SPY's only up 11 because it's not the momentum stocks. It's the whole SPY, but the SPMO, they have a filter for momentum. SPY H is interesting. Oracle, it's the first thing we've agreed on all day, but now I'm just giving you a hard time. Yeah, SPY H is interesting. Let's go look at SPY H. I mean, for one thing, SPY H is NEOS, so you don't got to worry about anything with the management. It's NEOS. This thing has been around. Actually, I don't think it's been around that long. No, it's only been around about a year. They have another one called Triple QH that's been around since 2019. But it's the same strategy. So, I mean, yeah, this one is interesting. Let's do this with it. Let's just check it out. Let's see how well it does. Try to think of good competition for, but let's just compare it to SPY-I. I mean, SPY-I, which is also NEOS, but SPY-I isn't a hedged one. SPY-I will probably get more upside, but I'm trying to show how well SPY-H will do protecting the downside. So let's take NFLP off of there. Okay, let's also take Netflix off of there. Let's go like that. All right. So the SPY-I and SPY-H are right there together. That's just 3 months. They're very similar. SPY-I gives you more yield. SPY-H gives you more downside protection. But on the 3 month, it no different. Now on the longer time frame, SPY-H doing its job right here on the downside. Didn't go down near as much. But on the recovery, of course, SPY-I is going to do. I mean, they're close, and look at that. That's why I put the star there. I mean, sure, SPY-I is better, but not on a risk-adjusted basis. If you look at Sortino and Sharp, it just measures how much risk these guys take to do it. You're actually a little bit better off in SPY-H on a, maybe not on a, yeah, SPY-H is interesting for sure. For sure. I'm trying to think. I like one in this category called, which one do I like? Well, there's several. There's XRMI, but I think this one's a dog. This isn't one of the ones I like. But let's see how bad SPY-H. Yeah. See why I don't like it? I mean, but to be fair, it even has more downside protection, but virtually no upside or very little upside, right? Put it next to SPY-I. Heck yeah, we think alike. Oracle, that's what we did there. That's what we did. All right, I think I missed some other questions. I was so excited about SPY-H. Generally, those hedge ones won't help until you go down more than the 3.5% drop. Well, sure. So it depends. It varies from month to month because they reset the hedge every month. But yeah, depending on how far out they sell their call, and depending on how much money they got for their call, that dictates where they can put their put. But yeah, it's the bigger drops. You aren't pulling for a bigger drop, but they benefit more on a bigger drop. And this March drop wasn't shit, is I think what you're trying to say in a nice way. That, but still, it did protect a little bit better than SPY. But yeah, good point, Alan. Good point. Most are fool's gold. Well, especially in a bullish market, because but in 2022 or something, one of those could have looked really good. It depends on what's going on. We got Will in the house. Let's see here. What else am I missing on? Okay, good to know about TMG and Yield. I was hoping it would be at max 20. I think that's the edge of sanity right there. You're looking forward to comparing this one with KEO. Me too. Not apples to apples. So may not be the true best head-to-head. I'm thinking the head-to-head one's going to be KEO versus YMAX versus Top W. Because fund to funds of other high yield funds, it'll, or the real head to head one would be against YMAG, TMGN against YMAG. You could also compare it to GPTY or whatever. We'll compare, that's why we have this. We'll compare it to everything out there. You like VTV because it's not high on tech. Yeah, that's the value one. Yeah. Vanguard value. The pay is similar to VT ETF. Oh, so pay PEY? Really? Okay. PEY, is it high income? Okay, yeah, Invesco high equity dividend achievers. Heck yeah, that's a good looking chart right there. I mean, would you take a look at that? A bunch of boring companies like Pfizer and stuff, and Prudential Financial, but the Main Street Capital, but those boring ones are boring for a reason, but they're also, that makes them a lot safer typically. Heck yeah, it pays monthly payments. It pays 4.13. Why in the hell haven't you told me about that one yet? It's your fault that one's not in the factor. Like I said, we're probably going to have 1,000 in the factor, and the Dirty Dozen's probably going to have 50, where we study each trade on the Dirty Dozen. We studied on a trade by trade basis. On this, we studied on a tick by tick. Who's PEA from, or PEY? Oh, Invesco. All right. Well, heck yeah, it'll be in there starting tomorrow. Thank you for the tip on that. Coasty is saying VUI, VGTX, Buggy, and VTVX are standing. VTXVX and VTVX standing from X funds. Okay, so there was 4 of them. So VGTX and VTVX. So they do have a VTV product. Is that what you're saying? So yeah. They have a growth product, a value product, and they have the VU, which is the whole index. And then what was Vuggy? Oh, Vuggy's the growth, though. Let me see here. VUG is growth. Okay. And VGT is, that's IT. That's right. And then the other one was VTV, which was value. Well, heck yeah. So that's what somebody was asking for. I forget who asked that, but they were asking for a value-based high yield fund, and it's not out yet, but it's coming out from, I think those come out September 1st also. I'm trying to get him on the station around the time it comes out. So I'll let you guys know. Generally, those hedged ones, yeah, we already talked about that. Most are fool's gold. Oh, we got Mark in the house from the beautiful state of Virginia. Alan. Okay, on the Blocks ETF, what are they attempting to do with it? A Bitcoin adjacent fund? Well, they haven't filed any new prospectuses. So but in general, what they're attempting to do. Okay, what it used to be a fund that held 40% 45% direct exposure to Bitcoin through ETFs. They had HODL. They had like 15 or 20% in HODL. They had 15 or so in FBTC, and then they had like 10 in ETHA. That used to be how it was. But then and the rest was in Bitcoin adjacent stock, like so Morrow or whatever, mining stocks. But they were about 40-60 Bitcoin to Bitcoin adjacent stuff. Anyway, then when Bitcoin went into bear market, we were just talking about this a little bit ago. We'll pull this back up. But when Bitcoin went into a bear market, they switched their allocation. And lately, they've only been about 20%, 20 to 25% Bitcoin, and then the other 75% Bitcoin stocks. But now the Bitcoin's back in a bull market, and people have been complaining they're underperforming, and they are. But they also cut their Bitcoin exposure from 45 to 20. They've cut their Bitcoin exposure in half. The way I look at it, you have to take the good with the bad. Them cutting their Bitcoin exposure has kept them from doing nearly as poorly as lots of their competition. However, this is the perfect tool to show this here. Let's see, blocks and we'll look BTCI just because they're a reputable family and that's our proxy. So, and this is going to be Max. So Bitcoin was in a huge bull market, and we can also show that. Bitcoin was in a huge bull market. This is last June, July, August, September, and Bitcoin on October 2nd was up about 20% just from like July. Now, at the same time, of course, Blocks was up 55%. But Blocks is also a lot riskier. I mean, whatever. Blocks is like leverage Bitcoin. It's like comparing GDXY to GDX. It is kind of similar because it's miners. It's but these guys have Bitcoin miners instead of gold miners and silver miners. But so then let's watch what happened on the opposite. So then it topped out. Let's see, we topped out right about here. And then we rode Bitcoin down to 59,000, I believe. And sometime around in here, they cut their Bitcoin exposure. And I think it definitely helped them compared to BTCI. But even compared to IBIT, they're beating IBIT. Now, but granted, the fund is some Bitcoin and some Bitcoin stocks. So I built a benchmark where it's just half stocks and half Bitcoin. And against that benchmark, they're actually a little bit behind. And this right here is what people are upset about, and understandably so. This has been a bad time for these guys. I mean, they've been any other time we looked at, they were killing BTCI. But if you want to look at since June, off the low, if you want to look off the low, heck, BTCI's jumped 18.2%. And Blocks is actually down 11% over that time frame, and that includes the dividend is the worst part of it. And they were underperforming the benchmark. And if it keeps going like this, BTCI, will pass them. I mean, but it'll take a while, but we'll see. We shall see. But yeah, they need to get their butt in gear because that is a bad look right there. Let's go back off the lows, off the March lows. Off the March lows, they're doing better than BTCI. They're at 17-9, although the benchmark's doing a lot better than either of them. So let's go back here to, and off the highs. Let's just go off the highs again. Off the highs, they're both doing bad. Blocks is down 35, BTCI is down 35. Off the highs. BTCI didn't drop as far, but it also wasn't up as far. So but net, they both dropped. They both gave back a third of their value right there. Anyway, so we can look over here year to date. Year to date, I mean, this is you guys can see this move right here is what's got everyone up in arms. That has been a bad look for Blocks. They need to get their butt in gear. All right. So yeah, blocks equals Bitcoin and Ethereum plus miners. Did I describe it? I thought I did a pretty good job. I just always like to say it was 40 to 50% Bitcoin and Ethereum and 50 to 60 miners. And but then lately it's been more like you know, 30, 25, 75 or something. Coasty, heck yes, yes, yes. Their pay is very safe. 4% isn't bad, more than a high yield savings account. Heck yeah. Well, dude, we're going to start looking at PEY. Heck yeah. BTC's not in a bull market. This is a pump and dump. Watch out. Yeah, maybe so. Oracle saying no matter how you look at it, their trades suck, which is what I'm showing too. You look, especially over the past 2 months, you can see how bad it sucks. I like to quantify something instead of just saying it sucks. But yes, it has sucked lately. There's no doubt. I'm with you on that, Oracle. And he's saying, I cannot make excuses for those guys. If they screwed up, they screwed up. Heck yes. Heck yes. Don't tell Brad that. Now, easy now. Come on. We're all friends here. Even though they sent you a free hat, they can still say, which is what I was saying. I mean, absolutely. Absolutely. They've sent me 2 free hats, by the way, too. Hey, we're in the big money over here. I got one about 2 years ago, and then my dog chewed up one. They sent me another one. All right. Yes, just trying to explain what the fund is compared against, which is some mix of assets. Hard to find direct comparisons. And that's why I made that, you know, but so like I say, I like to objectify stuff. The way I know something sucks, if it's underperforming the benchmark and it's nowhere close to the benchmark. The benchmark, this dotted line, is nowhere close. Now let's not just focus on ones that suck. Let's put in some good ones in here, or let's put in ones that don't suck as much. Let's put in SEPI, and let's even throw LFGY in here just for fun. And let's see how those have done over Senos. Let's go on a year-to-date basis. SEPI's the best, up 9%. LFGY is flat, and blocks and BTCI are down. And that's a year-to-date basis. Let's look at it off the lows here, off the Bitcoin lows. And like I say, BTCI is coming back strong. They went from last place to first because they've been lagging a lot. But like somebody said, Bitcoin's been in a bear market. Of course, BTCI trades Bitcoin, so that's all they trade is IBIT, and IBIT is down like 50%. So yes, of course, BTCI sucks, but now the Bitcoin's bouncing again. BTCI is back in the game. BTCI is spanking the 50-50 benchmark. BTCI is beating SEPI off the lows. BTCI is beating LFGY and beating blocks badly beating blocks. Hey there, man. Thank you so much, Oracle. I appreciate that. Thank you so much. You're a good dude. Okay, one thing I find valuable is Brad's blow up over blocks that X funds should find a new trading team instead of Tidal. You know what? I'm gonna have a different opinion on that. I don't think it's the trading. I think it's the guys that are picking stocks. And you know who the guys that are picking stocks are is not Tidal. It's Nicholas. Because Bitcoin's bouncing. They have Bitcoin in there, but their stock sleeve isn't performing. It's performing poorly. It's getting spanked. So but yeah, who would you want them to go with? Tuttle? There's not many of those guys out there. Tuttle does that kind of work, and he does a great job with T-Spy and Tap Alpha. And there's other ones. Tuttle also does a sub-advisor for Rex. But yeah, no, I'm going to say I think it's on. This is on David, or yeah, that's what I think. ISBG. All right, let's look at old ISBG. The reason I'm saying it's on David is because something like IBIT doesn't have, or BTCI doesn't have to pick stocks. It's in IBIT. That's all it can do. Okay, so if blocks was also just fully in IBIT, it would be doing fine. But blocks is partially IBIT, partially stock. We know the IBIT's doing all right because we see what it does to BTCI, and we see what Bitcoin just melting up. So the stock part of the portfolio is what's holding blocks down. at least over the past month or something. That's what I'm saying. We can look at this a little bit deeper. Let's see exactly what they're working with. The Dirty Dozen. Okay, so as far as managers trades, they have the best. We've only been doing this like a week, but let's see what Blocks is working with as far as stocks go. Let's see what dogs they have in this pound. Blocks. Okay, Blocks. I know this is hard to read. I was trying to make the site better, and the site's better, but the reading part isn't. But I guess we can just look at equities and cash. Okay. So FBTC, I was just telling you what I say. They had 15%. Yeah, right there. So they have 15% FBTC. They have about 8% ETHA. So that's 22. And then they have Riot. They have 7% of the fund is in Riot platforms. Then they have Knight, that's also long Bitcoin. It's a bullish Bitcoin fund. It wants Bitcoin to go up. So they have 14 plus 8 plus 7 in Bitcoin exposure directly through FBTC, Bitcoin, and Ethereum, ETHA, and then they have Knight. And they don't have any, they used to have HODL. I think that they switched to IBIT or something, I heard. But they don't use IBIT stock. They use IBIT synthetic. Anyway, they have approximately about 30% between FBTC, IBIT synthetics, ETHA, and Knight. And they have 70% in things like Riot, Hut 8, Taiwan Semi, NVIDIA, Cipher Digital, Iron, GXLY, Little Galaxy Digital, BHedge, and BHedge is a bearish, that's a hedge one, but so really that needs to come off the Bitcoin allocation. So it's 30% of Bitcoin, then they have 5% in a hedge. They're about 25% long Bitcoin type stuff, and about 75% long stocks. But anyway, speaking of stocks, then they have this Figure Technology. They have TeraWulf. They have Coinbase. They have Mara. They have Hood, CoreWeave, Bullish, Circle. And then they have some fixed income. Oh, and they also have this Kill. So, I mean, that's what this constituents is for here. We can see, what they have and which ones are doing the best, or, for each company or whatever. I mean, this is on a 1 day return. It's pretty ugly. Because stocks, even though their stocks are Bitcoin adjacent, they're more correlated to the Qs. The Qs were down a point today. So the stocks, the best stock out of all these ones, the best stocks were up 2, 3, 4, 5%, and the worst stocks were down 20, or no, down 11. AAOI, HIMS. So let's look at it this way, I guess. Company name. No, up here it says ticker. Let's do. I mean, we can look at. Well, part of the reason David's stats are higher is because he's actually only had a couple of trades, and they've both been big winners. He had IBIT, and that's up 26%. Good timing on that. And this Figure, if their stocks are doing bad, it's not FIGR, because he bought FIGR at 34 and it's trading at 38. The ones that he got before we started tracking it are obviously the ones that are doing bad. This will get better. I know this is a mess, but that'll get a lot better. Hey, Brad, what's up there, man? Get a real hat, a UGA hat. Well, hey, Brad, get a load of this. Get a load of those Sooners, those Oklahoma Sooners. Dude, I'm so excited about football season. I had to put on my jersey today. No, I was doing laundry, and I washed everything else, and I was looking around. I don't usually wear this except on Saturdays, and I probably jinxed myself. Thank you, Brad. I appreciate you, bud. Hamburglar, yeah, I mean, like I say, we're all friends here. I try to stay out of that kind of stuff. If you mean I don't like their strategy, just don't buy. Oh, yeah, absolutely. Well, I mean, but, so I can see that. I mean, So I'll read a prospectus and fall in love with the strategy. Feet is a prime example. Feature. I bought it, but they weren't doing what the prospectus said. The stuff they said in the prospectus, but they were not doing that. And I bitched and cried nonstop about that, and I told them they needed to close that fund, Feed and 5e. And I got Miss Roundhill fired up, and she was on an interview with the old Max, and she said, "Why don't you guys close Feed and 5e?" And they did, like a week later. So yeah, I've been in that boat too. I've liked the fund before that I thought was going to be good. Then I've been super disappointed. I have been real super happy with Blocks, how it's been performing the past month. Now I only bought it back 2 days ago. I sidestepped a lot of the Blocks damage by selling it in January. Now I didn't sell it because I don't like Blocks, but I sold it because I didn't like Bitcoin. But now the Bitcoin's back above the 200-day. I'll try to write it back up. But then we have over here who's trying to jinx me, saying that the Bitcoin's a pump and dump and it's going to go back the other way. That better not be true. One of you guys is trying to jinx me over there. I forgot who said it. Was it Coasty? Anyway, it may be. All right. But like I said, I've been disappointed with funds. Anyway. Yeah, college football starts this weekend. Correct. So 24, 25, 26. Yeah, that's you're trying to get rid of Total ASAP. So what do you have left? I have Meme Y. Well, and I have DRMP too. Gosh, don't remind me. But anyway, what do you have? Okay, Will's take on Tuttle based on his interviews, nothing else. He has great ideas, but poor execution, lacks a systematic approach. Yeah. I hear you, Will. Will says, I'll look at the chain and see if there's a price, like maybe I put on a trade, maybe not. He's a vibe guy. I hear you. Oracle saying all these fund managers are snake oil salesmen and used car salesmen. No, I threw the used car salesman in there. Snake oil, whatever. None of them even do their trading. They are all front man. You can't stand the one you can't stand the most is Psy. Really? Okay. I usually don't hear bad stuff about Psy, but heck, we can all have our own opinion. Heck yeah. I think that the market's a lot more random than other people think. And anyway, I don't know. I don't think they have as much control over it as some people think. But anyway, but yeah, I hear you on that. Oracle. Psy is pretty annoying. Okay. But you like old TDAC and T-Spy. TDAC and T-Spy perform roughly about the same as SPY-I and Triple QI, which are pretty good and not much worse than like JPIQ and JPIX. There's some of the steadier ones out there. So, all right. Well, trying to think which fund manager annoys me. I'm just so easy to get along with. I like everybody. I'm just naturally an agreeable guy. I like all of you guys. I like everyone in my Discord. Sometimes somebody else will tell me in Discord, "Hey, I'm not digging this one other dude in Discord." I'm like, "Really? I think he's pretty nice." Anyway, I'm just kind of a easygoing guy. All right. You agree, size and limit, you like their new funds. GPIX, GPIQ are the GOAT. That is true, but or is it? I'm going to give you let's give you an alternate scenario. But yeah, they're in the top 3 or 4 easily by any measure you want to look at. But let's look at some of those measures. GPIX, there's no doubt that one's badass. But the one that's going to be most able to compete with is something like an OVL. Well, we'll throw T-Spy on here just to let GPIX whip its butt. And then we'll throw SPY-I on there. So let's just look at some of the blue chipier, SPY based, and then we'll look at some of the blue chipier Q based. Okay. So year-to-date basis, that's a good look for OVL. It's a good look for GPIX, but see the star right there? GPIX actually has a higher risk-adjusted reward. Yes, OVL's up a little bit more and has been up the whole time. OVL's been ahead 84% of the time. SPY-I's only been ahead 14% of the time. GPIX was only ahead 2% of the time, but it also didn't drop as far, and it's also less volatile. GPIX is actually over this time frame a 2, a Sharpe of 2, which is, or no, a Sortino of 2, which is pretty dang good. It's more than any of these other ones. And yeah, T-SPY's in last place on this one. So trying to think if I missed any other blue chips. I always for T-Pay's not bad in this if you in the 10% payment range. So well, let's see how bad T-Pay is. I'm saying it's not bad. Let's go see if it's really bad. Yeah, T-Pay over this range, and it's not year to date anymore. This just goes back to February 18th. T-Pay had the highest Sharpe ratio. OVL was up a few more little percent though. Yeah, but T-SPY's in last place on that one. But T-Pay's it's an interesting fund. All right, so let's forget about this and let's look at the NASDAQ. Let's look at old GPIQ. Now, I bet you nothing beats GPIQ because there's not an equivalent. There's not an OVL fund yet that does tech. So we'll look at GPIQ. We'll look at old Triple QI. We'll look at, a QLDY. We'll look at, how about old Triple QT? And what else do you guys want to look at? We'll look at those three. All right. Yeah. Look at GPIQ, wins on return and also wins on risk adjusted reward by quite a bit, 16 to 12. And I predicted it. I said, I don't think anyone's going to get GPIQ. Much to my dismay, because, I bought QLDY. Like I said, I can't predict the future. If I could have predicted the future, I might have got GPIQ. But at the same time, QLDY has uncapped upside. The other ones are capped. So let's see, but let's see if it's doing its job though. It ought to be the best off the lows then if it has uncapped upside. And it is. QLDY is up 21%, 21.87. Triple QT is up 21.82, but GPIQ is still the best fund. It may not have been up as much, 21 to 20, whatever. But when you look at risk, GPIQ is hard to beat. Triple QI's in third place there. Now that's off the lows. Let's go off the highs. Let's go from the highs to the lows. GPIQ protected your capital best over that time frame. Let's go in the we had kind of a bear market, or a grinding down market from February, March, April, or February, March. I guess February, March is all we had. Oh, but this goes back to September. Okay. So September, December, February, or January, February, March, the market really didn't go anywhere. I mean, we can look at the Qs. The Qs didn't make a new high. They just went straight sideways, and then they went down into March. Okay. So over that time frame, let's see who did the best in kind of a grinding market. GPIQ. GPIQ is only down 3.35, protected your capital a lot better than all of these other ones. GPIQ beat the benchmark and outperformed it. Best risk adjusted reward. Yeah, no, GPIQ is badass. So let's do this. Let's get rid of let's get rid of the competitors, because the competitors are newer. And let's just compare, so we can go back on a further time frame. Let's look at GPIQ against like Triple QI, because they've both been out 3 or 4 years. So we can get a little bit better perspective on it. And okay, and we also have the benchmark on there. So benchmark's the dotted line. Benchmark's ahead a lot of the time. The benchmark finished ahead. The benchmark is ahead 66 to 60, but not on a risk adjusted basis. GPIQ's arguably the best fund. I mean, even better than having the Qs, especially if you needed an income. So let's do this. Let's measure off the April lows, that April of 2025 lows. And on that frame, it's still GPIQ. GPIQ is winning on every time frame. You can, let's just drag it across and see. Okay, we're just dragging it across. Triple QI. I mean, Triple QI is winning sometimes. Then Triple QI took over, went to first place. It's still the best one, has the star. Now, right there for a little while, triple QI fell to the back of the pack. But anyway, over the whole time frame, it's GPIQ. So that's what I wanted to do. I wanted to get a little bit more perspective and go back on different time frames there. And I think we've already checked this one off, but off this year's lows, that's the only way the bench looks a little better there. But that's anyway, they're all good. They all could work. They could, All right. TPay. Yeah. TPay does have no AUM. Thank you for pointing that out. I should have thought of that. Let me see what TPay's health score is. I do a health score that estimates his 2-year survivability. Let's see what I'm saying it is. 50-50. Yeah, it only has 1.6 million. Yeah, you're right. It's a coin flip. It's a coin flip at this point. So yeah, that's not great. Now the one that does a little better on AUM, I think, is XPay because it's been out longer. But yeah, let's see what XPay's health score is. XPay has a 59% chance of being around. So a couple of years from now, it's a little healthier. XPay also has 161 million, which is a heck of a lot healthier. Let me get my face off there. If you want to look at a dumpster fire, oh geez, SPCI. Tell me about it. Do you think it's any worse than DRMP? It can't be any worse than DRMP. I mean, that thing is just killing me. DRMP. Oh, it's not 90 days old yet. Okay, well, let's look at SpaceI. SPCI. I mean, that looks like a giant middle finger right there, just flipping us all off. There's the first finger. There's the, there's the first knuckle. There's the middle finger. Here's the other one. Here's the other one. It's just saying, hey, get some of this, man. That's, that's bad. I mean, that's ugly for sure. And I'm trying to think of what we could even compare it to. I got one. We'll do a custom bench. We'll do the bench is NASA. You guys heard of NASA? It's a space one that doesn't pay a yield, but it's a space one. Doing better than NASA. But not off the highs. It certainly isn't. I mean, hell, SpaceI off the highs has burnt out 54% of investors' capital. And that includes the dividend because we're set on total return. I mean, the whole sector's been bad because NASA was down, 43. Let's make Mars Mars is another space industry one that doesn't pay a yield. Let's make Mars the benchmark. Mars is actually a better than Mars is doing better than NASA. But at the finish line, they're right here together. But yeah, they're doing poorly. But let's look at it this way. Let's look at it this way right here. All right. This is the bullish case for this. When it does well, it does very well. I mean, it was up 119%. Holy cow. But the whole sector was up because Mars was up 83, So obviously, it was, good times there. But then, like I say, not so much here, right? Let's see off the lows if it's doing any better. Okay, it's bounced 15%. But yeah, not. I mean, at least it's bouncing, but man, that'd be great if it bounced 15% but if it hadn't dropped 54% first, because we're still so far underwater on that one. Like I say, I bought DRMP. I didn't get that one, but I got DRMP. Oracle tried to tell me not to. He came in here and said I was pumping them. And I said the same thing. I said, it's like ESPN, but anyway, but I did buy that one. Anyway, bad decision. That's how we measure AUM now. OVL's great, but people want to keep looking back several months when and I've said that more than anyone, but I've said that, and that's always me to give the cautious, that I like to give the contrarian view lots of times. But I will say this though. Let's look at OVL versus, we'll do GPIX. But, I still have Space Eye on there. Okay. OVL versus GPIX. Yeah, I agree. They get extra credit for a long time ago when they had a 2 or 3% yield. I agree, but let's just go year to date and see, because year to date they've been paying the higher amount and they still look pretty solid. They weren't as dominant as they were when they were paying 2 or 3%, but it's not like paying the higher amount messed them up too much, in my opinion. And the way we know that is because everyone can agree, most of us can agree, GPIX is one of the better ones out there. And the fact that OVL, even at the higher rate, is a little bit ahead of GPIX is impressive. OVL doesn't have the same, as good of a Sharpe ratio as GPIX. But anyway, those are both, one's up 12%, one's up 10, or really OVL's up nearly 13. So yeah, I do think the higher payments hurt. Or they help the performance. But even looking at this year, you can really see where OVL excels, and it's those damn put spread overlays, the lightning spreads, the poor man's leverage, whatever you want to call it, synthetic leverage. Because off the lows, OVL and like I say, GPIX is good, and OVL's up 20 and GPIX is up 17. Interesting though, the GPIX still has a better Sorrentino ratio. Off the lows, GPIX's Sorrentino's a 6 and OVL's is a 4.98. So basically 6 to 5. They're both impressive. You just pick one there. They're both a hell of a lot better than DRMP that I got. Why? You don't have to predict the future. I do not. It is past looking. I always say that too. Add TDAC to that list. Oh, I'm sorry. I should have. Max is like a hooker. If you throw $1 at them, it'll stay on there. Absolutely. I got to get paid, man, right? I got to get that. Got to keep that paper straight, right? Throw $1, he'll stay on you longer. Anyway, everyone send me $1 right now. Heck yes. All right. Hey, you guys are going to be sad to know I'm going to be out of the office for the next week. So, Tuesday, Wednesday, Thursday, Friday. So I might still do shows, but there won't be as many of them. So you're having to get, that's why I'm doing an extra long one right now. All right. Aliens is saying, if you want something that beats at 10% distro rate, then do diagonal spreads. Otherwise, it's not happening. Heck yeah. Good advice there. Do you do those diagonal spreads, Aliens? A diagonal spread, I've always called that a diagonal spread by another name. You've heard of poor man's covered calls. A diagonal spread's a crackhead covered call, because a diagonal spread is kind of like a covered call on another call. Because you get the one that's, diagonal, you sell something in this week and you buy something 2 weeks from now. The one you buy 2 weeks from now is your long. That's your stock. And so they call poor man's covered calls leaps because it saves you a little bit of money buying a leap versus buying, versus buying the stock. But a crackhead covered call is when you do a diagonal spread. But the point is, though, it's the same bet as a covered call. It gets capped. It brings it in income. It gets capped, but depending on how far apart you put the strikes, it has some upside potential. Heck yeah. Aliens is taking them up on that. Heck yes. You bought us some more time. The way that you get me to buy more time is just mention lightning spreads or say, hey, Max, can you do a comparison of TDAC? I like to do comparisons. That's the way, say, hey, Max, what do you think's better? Do you think TDAC's better or OVL? And that gets you another 5 or 10 minutes. All right. You think your local hockey teams has more AUM? Dude, Oracle has more AUM, a lot more AUM than those. Oracle's garage is worth more than some of these funds. All right. you're doing your part for the Misty Mafia. Well, heck yes, aliens. 13.20 cents a dollar. DGen sent $2. Heck yes. DGen, thank you for your contribution. You have been recognized. $1 drop his fannies. I'll start sending nudes. I'll send everyone a nude. I got a mirror over there. Heck yes. Heck yes. I am for hire. All right. Mayor's asleep in Israel right now. It's 2:15 in the morning. So I mean, or I would presume he's asleep. Anyway, Mayor's paid up. Mayor sent me $50 the other day. He's paid up. I'll keep talking for as long as all you guys got to get to do to get me to talk is tell me to run comparisons. You know, Max don't even want to know what we just did. Yeah. Okay. DRMP is definitely kicking your butt. You and me both, JT. Thing cannot catch a run. But then again, memory has been on a downward spiral. Yep. I mean, and DRMP came out right at the top of that. I don't think DRMP was ever up. I think it may have gone up for like a half a week or maybe a week, but then it's straight down from there. All right. Let's see here. Paid the toll in remembrance of Khmer. All right. Yeah. I've seen a couple of those before of those. You know, I do a lot of, I'm on Reddit a bunch because on my text machine, I have two text machines. I have an iPad but on my iPad, I'll open Reddit all the time. And yeah, there's some good content in there, some interesting content in there with regards to influencers. I'm surprised I hadn't seen somebody just roasting me in there. And that's not why I'm looking about it. I have thick skin. I don't care, but I'm surprised I've never read it and read a roast of me on Reddit. It's probably coming. XSHP. What do you want to know about XSHP? It's in the, with the Vegas trick, that Vegas trick, that Vegas trick. I didn't even get invited to that. Come on. I know people that got invited, but I did not get an invite to that. He could delete his channel, not the memory we hold in our minds. All right. So I'm trying to do something serious here. What is on XSHP? What do you want to compare it against? Or, give me something to work with. I don't think we're going to have that much. We can compare it to GPIX. It's not very good. XSHP just doesn't have a lot of history. It came out June 17th. It's space also. I guess that's what you're getting at. Yeah, I got you. XSHP. Okay, I'm sorry. Of course. Space Eye, and then Mars. Okay. Space Eye sticks a lot closer to Mars for what that's worth. XSHP, at least over this time frame, it looks pretty rough. You think 250K? Oh, you had 250K in XSHP and it acted like a damn inverse, man. Yeah. Did you have any of that? Did you have any SPCI Oracle? Did you get in on the IPO, or did you buy any afterwards? It lives rent free in our mind. Oh yes, he does. Yes. Oh gosh. He would live stream for like 8 hours a day. Well, he doesn't live stream much more than me. I'll do lots of days. I'll do 3 hours. Anyway, I just like to talk, and I like to, it's fun meeting you guys and talking about the market. All right, you're going to do an entire video on what idiots these fund managers are on. Come here. He couldn't speak English, but he's, oh gosh. All right. He used to make believe he came from Cambodia yesterday, and then he was picked up by I know it. All right. All right, guys. You don't know where all these space funds came from. Last time we went to the moon. What's your last time we went to the moon, Timex had TV commercials. Yeah, I mean, in other words, the 70s. Heck yeah, Mark, I appreciate you, bud. I appreciate you. I'm going to dinner with my daughter on Wednesday night, and I will spend that at dinner. I'll buy her a margarita or something. As you guys know, I don't drink, but having an extra heck nowadays, I haven't been drinking in 9 years because I got sober. But I've heard that mixed drinks are $20 now. They used to be 10.75, but I've heard they're 25 now. But like I say, I don't have any personal experience. Your videos. Oh, Mark likes to do Zelle because he doesn't like YouTube. YouTube takes a cut. So Mark and I have an agreement. He'll just send me a Zelle here and there. And anyway, all right. So yeah, you do PMCC on the Qs. I mean, okay, but you don't do the crackhead cover call on the Qs. But you get what I'm saying. I'm not trying to be a smartass, but poor man's cover call and a diagonal are the same trade. A cover call is a diagonal because a poor man's cover call is a leap. A leap goes out till next January, and you're selling something that expires next month. You're short 1 month, long another month. That's a diagonal. I know it's called a poor man's cover call, but so all the the crackhead cover call. Where I really got on those, that I don't know if you guys like Tasty Trade as much as I do, but that Nicky Batts, he on his earnings trades, that's what he'll do to get directional. Lots of times, he'll do he'll pick a which way he thinks the stock's going to go. Say it's bullish, and then he'll buy a call and sell a put, but a diagonal. He'll do a diagonal. He calls it a Nicky Batts special or something, but diagonals are good little trades. I love me a diagonal, but you need upper level permission from your, yeah. Okay. True. I remember, oh, Mayer's up, dude. It's 2:15 in the morning. What time now? It's 2:21. We were just asking about you. And I told him you were probably asleep. Mayer's probably been on a date. Mayer's a single guy. You've been out you took out a hottie tonight, probably, didn't you? It's a Monday night though, but heck, it's never the wrong night not to go get you some. Yeah, I'm not. But anyway, I knew what you meant. I figured you would. Yeah, I know what you're good with me. I just heard something beep. It was probably that PayPal going through, Mark. Thank you very much. All right. Yeah, Mayor Aliens bought some SPMO today. Next time I have a fund manager on, we'll tell them to get an SPMO fund. Especially overlay shares should do that. It would be perfect for overlay shares. They just own the SPMO 100%, no synthetic, none of this synthetic BS, just own the SPMO. But then SPMO doesn't have liquid options. So you would just sell, or that liquid of options, you would just sell put spreads on the SPX, which is super liquid, cash settled. And that might make a good little fund. Anyway, Mayor's good. Mayor sent me money the other day. Mayor's good with me. Let's argue about ELT. No more arguing. Too much arguing going on this weekend. Which market I think sucks more, this year's or last year's? It's a good question. I haven't really thought about it. I'm a visual guy. Let's just go look at it. Let's just go look at it. We're going to look at high yield funds too. We're going to put OVL up, and we're going to put GPIX up and look at 2 years. But then I want to look at but I'm trying to really look at the SPY, OVL, and then we'll look at old GPIX. And then I don't know if I have 2 years as a selection. Yeah, I do. Okay. I mean, April sucked. April was nasty, but then on the other hand, the bounce back from April was glorious. It's been the same thing, right? I mean, March wasn't nearly as bad as last April. What people don't remember is we were under the 200-day, but we hit under the 200-day March 5th and stayed under the 200-day till May 7th. That was like a mini, correction or whatever. But then when we got back above, it was glorious. And I forgot, but this year, I guess some of the, I don't think the S&P got under the 200-day. Well, I'm going to say, I mean, this year's has been fine, really. I mean, let's do it like this. August, November, December. So here's this year's right here. Basically, so far the SPY's up about 11%, and we're okay. So that's fine. Now let's go look at last calendar year. And we're going to go out to about the same place we are now, which is the end of August. Okay. And we're going to start about, January, whatever. So this was last year's market to the same point we are now. This is January through August of last year. I mean, I think this year's better because that pullback was, that was nasty. I'd say this year's, I just generally like steady. We're still cruising up. We've been above the 200 the whole time. The 200's moving up. I think this year's is, I say my vote's on this year's. My vote is on this year's OVL, just OVL and GPIX. Look at these, up 40, up 35. These guys are just doing a good job. Yeah, all right. I'm up. Watch that Hail Mary movie. Don't waste your time. Good to know. I don't waste my time on movies much anyway. I watch TV shows. That's what I like about YouTube. The videos last 5 or 10 minutes. If you don't like it, you just put on another one. The Max Factor Turnpike. Okay, SPMO is a good solution if you're tired of hearing the SPY is always better. Well, yeah, I mean, because it's just a filter for momentum. They say that momentum is the factor that I forget the exact thing, but momentum is one of the best factors on backtest. When you look at backtest and people do things for I think, in other words, I've heard momentum backtest will beat value backtest. And which is a strategy where you look for ones that are pulling back but are good companies or whatever. But yeah. Momentum, I think the guys that did some type of momentum strategy won the Nobel Prize. I'll do some research and tell you more about that. I was reading something the other day. Mayor's caught up. Mayor is all caught up with me. Yes, you fade SPY. It's full of zombie companies. You just buy the cream of the crop, SPMO. Yeah, I mean, the one that's really has the zombie companies is Russell, right? I mean, but they also get some companies that are huge, growth companies, but they have a lot of companies that just are kind of zombie companies. All right, you sent PayPal. You don't like the fact that no, I already explained that to everybody. Heck yeah, no one likes that fact. Bring Saban back for Alabama. Heck yeah. You bought you bought SPMO too. Okay, well, we're all loaded on SPMO. Well, I'll start having SPMO coverage more. SPMO Mafia. ESPN's already arguing about who's number one. The season hasn't even started. So let's look at this. Okay, we'll look at OVL, but then we're going to look at, I'm trying to think of a way to do this. Well, I really can't do it. I'm thinking, I wanted to look at SPMO versus SPY to see what the difference was. Let's just do it over here. SPMO versus a little SPY action right here. Okay. Year to date, I mean, SPMO was down 9, SPY was down 7.5, but I mean, it's the bounce back. Those momentum just really came in handy there. The difference to the bottom wasn't that much. 7 to 9 is not nothing. It's another 15% lower. It's not nothing, but I mean, the bounce back was beautiful. Let's look at a 1-year chart. On a 1-year chart, the pullback, the extra, the momentum it does worse on a pullback for sure. But it just kills it on the way up. Let's look at 3 years on this thing. Look at that. So what about levered ones? You can also use, like, what's it called? SPD, or no, that's SP. Okay, now SPU, SPUC. There's an S&P one that is SPL. No, XPL, or there anyway. I was just trying to find that there's a double leverage S&P one. I mean, we could always look at anyway. You guys will tell me. Yes, SSO. Thank you very much. And that's the double or triple. I think ultra. I think that may be triple. But anyway, so here's the thing. So the leverage one also gets you extra upside, but they just lever the whole damn index. But still SPMO beats it, and SPMO is unlevered. So, but I bet you off a shorter time frame, like 3 months, is not going to beat it. Well, 3 months it might, because we've had a pullback. On a 6-month time frame, no, still SPMO number one. Year to date, 1 year. On a 1 year time frame, the leverage one is a little bit ahead. The leverage one was doing quite a bit better down here too. On the 3 year time frame, I mean, that's impressive. Yeah, SPMO is impressive for sure. Yeah, after paying yourself a salary out of it, your portfolio's NAV is right where it was last year. So heck yeah. Congratulations, or Ofer, Mayor. ESPN is arguing about who's number one, and the season, it hadn't even started. Brad thinks it's going to be Georgia, I'm sure. Who are you guys' teams? My teams are obviously Oklahoma, and I like Texas, but not really. I'm just kind of trolling because I'm from Oklahoma. I mean, I don't mind them, but I'm not really. I mean, buy, borrow, die. That's basically how I lived in the 90s. I was a stockbroker and had a good job too, but I had, or still do, I have some stock, and I would just live out of my margin account and, do whatever. And, but then I would get paid for my check, and then I would pay back my margin account. But then also I was selling options like crazy in the 90s. And I would also sell enough options to pay back the margin account lots of times. But that was before people even knew it. But my dad's always been buy, borrow, die. He taught me about margin a long time ago. He said margin's the best deal. And this is like in 1989 or something. He said, because if you have stock, you can go, they used to send you checkbooks with your stock. I had Charles Schwab. He had Dean Witter Reynolds. But you could go write a check against your stock, and they would charge you prime +1. And at the time, my dad says that he can't get prime +1 at a bank, or even if he could, he would have to go fill out applications. So with margin, at least it used to be prime +1, and you could have the money the next day. It just gave you great liquidity. But yeah, and also my dad was an accountant, and he was always into always thinks about tax consequences, and the tax consequences have always been better, for financing stuff out of margin. But yeah, my dad's the one that taught me how to do that. Now, my dad didn't tell me when I just been working 6 months to go to Vegas and get a suite at the Mirage and out of my margin account, but it was sure fun. All right. What is an underrated State Street sector fund? XLU, XLI? That's a good question. We'll look into that. Yeah, UPRO's triple and SSO is double. Yeah, UPRO triple. All right. Go Gamecocks. Mark is a South Carolina guy, tax-free, living out of margin. Yeah, it's the way Elon does it. Elon buys companies out of his margin and stuff. But yeah, yeah. All right. So I have something else that we've never even looked at, because I did this late at night and I forgot that I did it even. But the question about about what's an underrated State Street. I think there's an app for that. So check this out. I just found this today. Well, I guess first of all, you got to turn off this stuff. So, okay. So I made a technical analysis screener. And like I said, I don't really even know how it works because I made it late at night and then I never jacked with it. I forgot I made it. My point is, so golden crosses, this just shows you where you've had a cross, but I think this can also show you, I had them design pullbacks, a pullback thing also. So that's just golden cross. So when I was looking at this today, it had RSI and it had all kinds of other stuff. Somehow I've got this jacked up. Not that. Maybe it's because OVL's in there. Well, I was all excited about this. I was like, I can't wait to show these guys. Because when I was looking at this afternoon, they weren't all golden cross. Oh, that's what it is. Okay, okay, there it is. Near 52-week low. Well, here's why you can. Here's the ones that are oversold. Now, lots of times these are the biggest dogs out there. I mean, oversold, but not always. Sometimes you can find one that's still a good company, but that's oversold. Like CRF. I mean, a lot of people, Cornerstone's 4 or 5-star, Morningstar. It's a closed-end fund. A lot of people like that one, but if you're if you want a deal on it, and this doesn't factor in the premium or discount the closed-end funds have, but still, it's pulled way back in its range. Most of these other ones are ones that I wouldn't touch probably. But there's another way to look at it. Golden Cross near 50-week low. Oh yeah, RSI less than 30. This is another way to find all funds. That's what it is. Okay. So all funds, RSI. Okay. Okay. That is the one there. So these are all the ones where the RSI is under 30. So these are, you still have, like I say, you still have to pick a good one. If Foxy, there's the pick right there. I don't know why when I click, it doesn't go to the chart, but it does put the data over here. But let's check out a couple on here. Let's look at, I'm trying to find some quality ones. BIT is a BlackRock Bitcoin fund. Let's just look at Foxy and BIT and see what's going on with those two. BIT is BlackRock. Okay, so so right up here on the stats, the health, they're about the same. They're both about a 50-50 chance of being around in a couple of years, but they have plenty of AUM. They just don't have very good recent health is the problem with those guys. Let's turn that off. Obviously Foxy looks a lot better. BIT is a lot steadier though. You look at it over the past, since April or whatever, BIT's looked a little better. Foxy has dropped quite a bit lately. Foxy. Okay. Well, anyway, let's turn that off. I need to work on the technical part of it. Golden Cross below the 50. I don't know why you'd want below the 50. I mean, I guess for a pullback. I need to make a screener that says below the 50, but above the 200. So that would be a pullback in a longer term healthy context. So let's just see if we can find one of those below the 50. Let's look at Foxy and see if that's Foxy right here. Okay, so Foxy, let's see. We're obviously below the 50 because it just said we are. Okay, but are we above an upward sloping 200? Well, no, but but I need to build some better technical stuff on there. Yeah, and there's the RSI. If you ever look at RSI, it's RSI goes from 0 to 100, but yeah, it's down here trading at 30 or whatever. A lot of people will use a low RSI of under 30 to look for a chance to buy. If you would have done it right around in here and we got Foxy around then, it was good. If if you could say sell if the RSI gets above 25 or whatever, and it did right here. Now it still kept going up a little bit. You got back under here close to a buy signal, and it was close to the bottom for the market. Anyway, yeah. But anyway, guess where we are again? We're right back here where the market's bounced other times when the RSI's got here. So we're definitely oversold. Foxy's the pick. Foxy is the pick. Brad bought SPY-U last year during the tariff dump. Yeah, and that's double leveraged inverse, right? Or is that triple? I think it's double. Let me get back up here. Yeah, I'm still here, Oracle. These guys keep giving me this damn money, and they won't stop giving me money. It's your fault. You created a monster. No, why don't I let you guys go so we can reconvene tonight. It is tonight. Hell, it's 6:39. I'm gonna go get dinner. I got to go pack for my trip and stuff. I'll be back here at 8. It's Maxi Monday. And Maxi Monday ought to be fun tonight because Bitcoin stocks have finally started rallying, so I think Stretch is going to look good. I think SATA's looking better. We've already seen CEPI, CEPI looks really good. Even LFGY looks pretty good. So tonight ought to be interesting. We'll look at all the Bitcoin stocks and see which ones are the best. Let me make sure I didn't miss any questions. We're now the SPMO Mafia. Seems like every March has been a correction the past couple of years. Yeah. But then before that, it was October correction. October of 2023 was a major low. October of 2022 was a major low. October of 2024 was a pullback of a decent place to, October 2024 was a good place to get in because then after the election, the market went to highs. October. I think if you go back over the years that October's the best date to enter. I mean, if you look back at like 100 years, you should buy like on Halloween and sell like in March or something. I saw somebody that did a study on it. Yeah, I can do that. I can do that, Mayor. Since you're up and with this, I'll do that. And unless there's anything else, then I'll let you guys go, and we'll get back together for Maxi. SPY V. And we got old SPY G. And we got SPYD. SPYD. Okay. Well, yeah. I think Mayor already knew the answer to the question, but heck yeah. Heck yeah. But the question is, can they beat double levered? Yep, they sure can. Can they be triple levered? No, the triple leverage got him, but the triple leverage was a hot mess right here in the April pullback. The triple leverage went from up 100% to up 44%. It lost half of its gain for the year. I mean, but if you held on to it, you're fine now again. Leverage works. I really do think momentum is a better factor than leverage, because leverage is just math and it works both ways. With momentum, a good momentum stock, in my opinion, ought to get a little bit more upside than downside. I think momentum is a better way to do it than just. But on the other hand, doing it with leverage is also, because you know exactly what's going to happen. On momentum, they pick stocks, and on leverage, boom, if I buy this triple lever, the SPY's up 10, I'm going to be up 30. So I'm not saying there's a right or wrong way, but I think the SPMO strategy might have a better Sharpe ratio. In fact, I bet you anything that the momentum strategy would do better on Sharpe, even maybe if it loses on just net return. Yeah, there's SSO. I got that. What is not okay? Yeah. I was hoping that we would be able to look into that. I mean, you just have to, they have different sectors. You just have to study the sectors, I guess. We got XLVI. We got, I mean, XLBI, maybe BI. That's building materials. We got, I'm just trying to remember them. We got XLRI, real estate. We got XL, FI is finance, which has been on fire lately. It's not pulling back at all. I'm going to say building materials or something. I'll get that. I'll get some more data for you, but maybe XLBI. UPRO's a triple. Go Gamecocks, tax-free living off margin. Oracle left and came back. You bought SpyU. So yeah, no, it is very revealing. I did it. I put it on there. Heck yeah, it is very revealing. I think it's a good look. I think SPMO wins even against the margin. That's what I say. I think SPMO is a better DGen plan. All right, Mark, go have a good dinner. I'm getting ready to do that too. You have SpyU, that's a 4X. Okay, well, that's too crazy. We obviously it's, you know, yeah, that's too crazy. Those dips, that's right. Went from up 100 to only up 44, lost 60%. All right, guys, I'm going to get out of here. I appreciate all the generous super chats. I thought I had 150. Wasn't there? Didn't there used to? Well, you guys can't even see that. Maybe one of you guys took it back or something. That's what I'm trying to show you. See right there where it says, I thought I had a 50 up there too, but maybe when the person leaves the room, the 50 is no longer there or something. It's just showing me that I got $100 super chat and said Oracle's here. There it is. Yeah. Brad, $50. Get a real hat. It's ripping me off here. Maybe it's because I didn't star it or something, or maybe it's because I haven't showed it. Anyway, whatever. All right, guys, thank you so much. I appreciate it. Like I say, I'll be out of the office, but join me tonight and we'll have a chance to catch up. All right. All right, guys. Thank you very much. I appreciate it. I will talk to you guys soon. Later.